Morning, friends. Welcome to this session of the Multimillionaire Forum. This is May 2026, and this is incidentally the third episode or the third part of us talking about gold. You would recall we spoke about gold the very first time in May of 2024, which is 2 years ago, and then May of 2025, and then May 26, with once again talking about gold. And obviously, a lot of activity has happened in these last 2 years of gold from 24 to 26. You witnessed almost nothing short of a historical move happening in gold and silver. And we believe that there is a lot more to come. And that's the whole idea of doing this annual episode on specifically the bullion, which is have a bullion market across India and across the world. So what we've done for you is again, put some data together, put some interesting facts together to corroborate whether or not the gold rally is still on or is it off. What are the factors that are affecting the movement of gold and silver, and how should we see gold and silver going forward as a part of our portfolio, and whether or not we should deploy some more money or maybe do some profit booking and all of that and much more. And then, of course, we'll go with your questions. So, first off, this multimillionaire forum, I must talk about a disclaimer when we are ready. Uh, this is a purely educational initiative of Transcend Capital. We are not going to make any sort of recommendation of any product or any sort of advice that we are giving away on this particular session. It's just purely a meeting of minds, gathering of some data and facts, and then we speak about ideas, and then we exchange further information. So that's basically what is happening. And having said that, we will now get into our presentation and what we just mentioned a while ago, that what we are seeing is nothing absolutely short of history. What happens is when history is actually moving in full flow, when you're right in the middle of it, which is what was the situation earlier in January, we felt like, this is probably the best place to be. This was a safe haven, and this was the best haven to be in. The kind of price rise and the kind of price movements we saw. And thereafter, there was a correction that happened in gold and silver. So is this a pause or is it permanent? That's really the question that we're trying to ask. In a few minutes, the answer will become very, very clear. So let's move forward. So in 24, I just want to do a quick recap. What did we speak about? For the ones who are seeing this for the first episode in May of 26, you will find the first episode and the second episode on our YouTube channel. It's in the live section. It's still there. We've not taken out anything, but it'll be well worth to see those episodes also, and then you will see and you'll be able to appreciate what we mentioned and what we said and the analysis that we did and how beautifully it is actually all come together. So we spoke about de-dollarization, which is basically world economies moving away from trading in dollar, dealing in dollar, and doing something else, some other form of payment mechanism, whether it is in rubles or yuans or rupees or something else. Then we spoke about the BRICS, and the BRICS kind of putting together their own currency, making an alliance of sorts. BRICS has obviously expanded way beyond the 5 nations. A lot more nations have joined the BRICS, and we spoke about that. That we spoke about how the central banks of the world were rushing to increase their gold stock. So that is also something that we are going to show you this particular time, that how has the central bank's gold position changed in the last 5 years. So you are able to appreciate that if the big institutions and if the sovereign nations and the key reserve banks of all the world countries are buying gold, there is obviously something which is happening, and it's a cue for us. In 25, then we spoke about gold versus the economic cycle. We also presented a study of the US debt versus the GDP, and basically how the gold and silver ratio has worked out for the last 200 odd years, and then going forward, what's the ratio going to be? And we exhibited different scenarios. So we'll show you that also in a little while. In fact, can you put up the ratios first? Can you bring that? Can you bring that presentation slide up? So this is very interesting and very pertinent to note, right? Because we've actually seen this movement happening between gold and silver. It's very important to refresh these ratios. We are going to come back to the ratios time and again, And what this ratio basically, while my team is putting up the slide, what this basically means is that for the price of 1 troy ounce of gold, how many troy ounces of silver is it possible to buy? So that's basically what the gold and the silver price ratio is. This is actually our presentation of May of 2025. And what you can see here is that we did mention, for example, we said that if the average ratio was to be somewhere in the range of 60, sorry, my pen, yeah. If the average ratio was supposed to be 60, as you can see here, can you bring your cursor? Yeah, 60. And then at different prices of gold, what would actually happen? Now, see the beautiful, thing. Now, at this time in May 2025, gold was at a price of 3,200 odd dollars. We, of course, talk always in terms of the dollar price of gold and not the rupee price of gold. And then we said that if the ratio of 60 continued, why is this important? Because then, as gold price we saw from the time period of May 25 to as much as January of 26, we saw the price levels, all these price levels being met. 3,200 happened, 4,000 happened, 5,000 happened, and 6,000 hasn't happened, but it almost went up to 5,580 or so, thereabouts, which was silver from $53 to $67 to $83, and it also went and touched a high of $118. So now you can see why this ratio is so much more pertinent. And this ratio makes a lot of sense because worldwide, whenever there is an investment decision being made in gold, simultaneously silver has multiple dimensions, right? It's just not a pure physical investment that you want to have. It also has industrial use. It's a much more dynamic and a much more charismatic metal, if you like. So there is industrial use, there's physical investment demand, there is also demand in automobiles, and there's a whole wide variety of things that silver offers to us, and which is why this ratio becomes important. Bring back the current presentation. So this ratio has maintained through and through. Now we are standing today at gold being 4,500. Now what that means is that from the 5,500 levels, gold is currently at 4,500 US dollars per troy ounce level, which is about a 20% discount. Now, this 20% discount has stayed since February and then March and April, and today we are in the beginning of May. To us and to my mind, I think it becomes a fantastic opportunity because gold at a 20% discount, silver at almost a 40% discount, and when this war situation gets completely resolved and when it goes into the background, things will dramatically again improve and change for gold and silver, which in a way is also. Can you please mute everyone? Can you please mute? Someone's mic is on. Okay, thank you. Right. So what I was saying is that it's also not all that great news, because if gold and silver goes up, then we know that there is chaos and turbulence elsewhere happening. But well, I mean, that's the kind of world that we are in. So there is a balance of somewhere opportunity, somewhere chaos. So we'll see how it unfolds. All right. Okay. So this is again just a recap of the last 3-year price journey. So on 4th May, which is where we did this little session on gold and silver. So the price was actually not 32, the price was 26, as you can see. Silver price was $27. Can you mark your cursors there so that they can see, everyone can see? Yeah, 23 and 27. So this was the price of gold and silver the very first time we spoke about it. Then on 3rd of May 2025, which is exactly a year after 2024, this was our second session, and that time the gold price was 3,300 and silver was at 32. In Diwali of 2025, 17th October, I had a very special sort of an episode with CNBC, and I said that gold and silver are looking extremely bullish. Gold was 4,200 and silver was at $52. And literally within the next 3-4 months, it was like an astronomical rise. Gold went to 5,600 almost, and silver touched almost $122. As we speak today, As you can see, we are down here in the last 6 months or 5 months odd, we are down about 20% on gold, and we are down about almost, close to about 40% down on silver. And that makes it like a perfect opportunity for us to consider. But why is it a perfect opportunity? Let's sort of also get into that and learn a little more about that. Okay, let's move forward. So the three questions that we're trying to really answer is that as we enter 2026 of May, has the demand changed? Has the dynamics changed? Dynamic in terms of the geopolitical situation and what's happening around the whole world. Has that changed? And how much has our world changed, if it has changed at all? And obviously, the answer is yes to all the three, and it happens pretty much on an everyday basis. But let's go one by one into each one of them and figure out. See, the problem is a lot of us, tend to get rattled. So we saw gold went to 5,600, then gold has crashed. But this is not the first time gold or silver, or for that matter, small cap or mid cap or any other part of the market has gone up and not fallen. Falls are a part of, the entire journey, correct? But what happens is one tends to feel that, oh, everything's over. Gold, silver ka teji khatam ho gaya, that kind of a thing. But let's understand from some very, very important fundamental factors exactly what has happened and how has the demand changed. So let's move. Let's look at the demand from the central bank point of view, right? See, investment demand is something that you and I as retail investors will have. But the question really is, central bank demand has been extremely high for the last almost like 5 years. And as you can see, those blue columns are self-explanatory. This has probably been the highest purchases of 75 years. This is a slide which we've carried forward from the last 2 years. And this is the third year. What happens every time is, this is from Metals Focus and World Gold Council. So what the council does is every year it adds another bar, which is basically the closing data of the year. So this data, as you see for 25, is on 31st December of 25. And they have again bought close to about 830 odd tons of gold in the year of 2025. And quarter one report for 26 is already out, where most of the countries, which you will see in a moment, are continually buying gold even more and at a cheaper price. Obviously, the gold purchase is happening that much more briskly. But there's something very interesting I want to show you though. Can you put the World Gold Council data and let us actually see? There's some shocking piece of data which you will see. And this is a piece of data which we've gathered over the last 5 years. And this is directly from the World Gold Council website. So if you can just go to the website itself, if you have that, and then show us both the tabs in terms of what was the reserve currency, gold currency reserve in 2020, and what is the reserve in 2025, last 5 years data. Okay. Now, friends, this is very, very interesting. Okay. So first take us to the 2020. Okay, actually, sorry, come to 2025. There's just something I wanted to show. Okay, now 2025, right now, what we have done here is, let me quickly explain what this chart is trying to show you. And you can see this for yourself at gold.org. Okay, this is World Gold Council's website. It's like, the key resource for gold data. So these are some of the countries with the largest reserves. Obviously, China is at number one, Japan number three, and quite proudly, India is at number three. So, for example, our reserves are 707 billion US dollars as on 31st December 2025, right? And likewise, China was 3.7 trillion, Japan is 1.3 trillion, and so on and so forth. So what we are going to do is we are going to only study, we're not going to really worry about China per se or Japan, because they are anyways the largest reserves. This is their total reserves, by the way, in US dollars. How much of those reserves are held in gold is the study that we want to do. Okay. So leave aside China, Japan, they're the two largest ones at the moment. But let's study all the other economies of the world that matter. So let's look at India, South Korea, Italy, Singapore, Brazil, Thailand, Poland, Mexico. Okay, let's look at some of these countries. So now, as you can see, India, for example, let's talk about India first. Our reserves were $707 billion as on 31st December, out of which our gold reserves were standing at 124 billion. But forget all that. Important number to understand is 17.49%. India's total reserves. Once upon a time, this reserves was only in dollars. Now 17%, or almost, let's say, one sixth, between one sixth and between one fifth, 17% of our reserves are in gold. India's position in 2020. Can you show us the 2020 picture? How much did we have? Can you just click on 2020 now and show us India? I'll just remove my markings so it's clear. Where is India? Here. There is India. So our reserves 5 years back was 590 billion, and we had 41,000 in gold, which means the important thing to understand is we had only about 7% of our reserves in gold. From 7% over the last 5 years, we have built up to 17%. There is something that RBI is doing which is happening absolutely in front of our eyes, but we're not able to make some sense out of it because obviously the media does not cover it in front page news. Let's, for example, look at Poland. Okay, Poland is right on top here. I can see Poland had 9% of its reserves in 2020. Where is Poland today? How much percentage of its reserves is Poland holding in gold? Okay, Poland is here. I mean, these are the countries who are, let's say, the top 10 reserves of the world. So Poland has 28% today in gold reserves. So India from 7 to 17, Poland from 9 to 28%. Significant move, right? Okay, let's, for example, look at Brazil. Brazil today, 6.76% is a reserve today. How much was it 5 years ago? So let's look at Brazil. So Brazil, can you show us Brazil? Where's Brazil? Do a control F, please. There it is, Brazil. Brazil had 1.15%. So Brazil's reserves in terms of gold has gone up 6 times. Not a small number. And that's the case with everybody. I mean, South Korea, for example, 1.43%. And let's just look at South Korea currently. South Korea is today at 3.36%. Okay. So what is the message that these central banks are giving to us? That everybody's buying gold. So the story of de-dollarization remains, because why are they buying gold? If they were happy to trade in gold, in dollars, I beg your pardon, if they were happy to trade in dollars, then why would we need gold? But there is something structurally which is shifting around the world, and obviously we will only know when that shift happens. We are not going to know in between. But if you are reading the signs, then it's all very clear. Okay, what did Iran just say in terms in the due course of the Iran and Israel and USA war, saying that we want payment for oil in Chinese yuan? They very clearly said it, correct? They said fee collection, everything is happening in currencies other than the dollar. Russia for the last so many years has been under sanctions, and India and Russia are trading in rubles and Chinese yuan. So that's also very, very clear. So which means countries in the world that matter have already started looking at alternative means of transactions amongst themselves, which is like a clarion call for the rest of the world that this is the way things are going to move forward. So if you want, start building up your gold reserves. And that is precisely what is happening. All right. So question number one is kind of answered. Has the demand changed? The answer is absolutely not. And if at all, the demand is only increasing so much by leaps and bounds year after year. In 5 years, if countries are deciding to move their gold reserves from 1% to 5%, from 9% to 29%, I mean, that speaks volumes about the fact of how important and how much weight do they place on gold as being a part of its basket of reserves. And maybe something like BRICS currency might actually shape up. We don't know. We will know in maybe by next year or the year after, or maybe 3 years down the line. I don't. But let's look at the fact that gold is continuously being bought. So what happens is, there is, by the way, I read somewhere that for every some 100 billion ounces that are bought, the price moves up by about 1% to 1.5%. And there's a very interesting report, and this is by Bank of America, where they're saying that gold can touch about $8,000. So I mean, it's all over the YouTube. If you like, you can have a look at that. But see how these things can be corroborated. That's the speed at which things are happening. Okay, now have the dynamics really changed? In terms of gold as like a preferred medium of exchange? Not really, right? Because in the most recent example, which is what we saw in this quarter 1, see what has happened is that we are going to speak about that in a little while. Okay, Turkey actually went and sold a large part of its gold. Can you change the next slide? Okay, Turkey has actually gone and sold. Uh, Too fast. Can you come back? Yeah. So just to remind that when there is fear, when there's war, there's turmoil, disaster, global chaos, what happens is people and countries like to depend on gold as a medium of the last resort to very quickly sort of raise cash. So now what has happened is a lot of you might be thinking that if there was war, if there was chaos, if there was all this problem, why is it that gold has actually not gone up during this intervening period since the war broke out? That is the period of March and April, where the whole world markets fell down in March especially. Why did gold and silver actually not go up? It's very interesting because oil was in the play. So what happened is a country like Turkey needed money, and the fastest way to raise money was to sell gold. And why did they need money? I mean, not only Turkey, but a lot of other countries also needed to have, including India. What happened is we all needed to buy dollars to be able to buy that oil. Because on one side, there were sanctions on Russia. You can't deal with Russia. Iran's oil, 20% of global supply is blocked. So then what happens is a very, very smart move by USA to clog the supply of oil to the rest of the world in the method and manner in which they were already doing. So there is no choice but for everybody to scramble for dollars to suddenly start rising or raising their stockpile of dollars so they are able to buy oil. And that is one of the biggest reasons why you have seen that gold was kind of muted in performance, because all the money was getting sucked out of from gold, from all other currencies, from bonds, from stock market, and the money was all moving towards buying US dollars. And which is why you've seen a radical depreciation of the US dollar, especially against our currency. But luckily for us, our government did not pass on the whole thing. Maybe they will. But well, the point is that oil is back to almost $120 per barrel. So we might see a lot more kind of a muted period for gold for some more time. But the moment this settles, then the money will just flow back into gold like a tsunami. This is what I think. Let's move forward. So, so this chain reaction that has really happened in front of us, where the whole world started buying dollars for oil, and therefore gold and silver suppressed for some time. We spoke about this, and I think this trend will stay on for just a little more time. See, because what is happening is not in a big hurry. This entire thing is going to be unpacked. The US is not going to move away their naval blockade in a hurry till the time the whole world learns that, well, there is no option but to, for example, buy this, buy the oil in dollars. And the moment that happens, dollar will keep rising, because then when it falls, it is not going to fall so much. So they are in some sense even trying to protect the dollar before eventually some larger debacle happens. So I think when even some time back when I said that the war is almost over, we are absolutely done with it, which is also true to a large extent, because they are not going to continue to fight with the same method of drones and missiles, but the war will shift to more narratives, and it will shift more onto economic blockades and blockage of logistics and blockage of supply chain around the world. And because of this angle of gold and oil and dollar, we will see some amount of turbulence still as we sort of move forward. And in the meanwhile, sovereign governments are buying gold. Let's not forget that. And gold at the moment is like if you like, it's in a very sweet spot, so to say. So I think it's a great time to invest in gold. Here, this is again a pictorial representation where actually we can see that since the time war broke out, look at what's happened to the dollar index. The dollar index has kind of gone up. Okay, crude oil, because crude oil prices went up. This is exactly what I was saying. And gold, for example, has kind of gone down. And this is all from February 1st till pretty much yesterday. So this is where you can see that this is how things have reacted. Now, as soon as, for example, when the reverse starts happening, so crude went up, right? The moment crude starts going down, what will happen is dollar index will also start going down, and what happens is the bullion market starts doing what it's supposed to do from an inflation adjustment point of view, as well as security safety point of view. Central banks continue their buying, so on and so forth. Okay. So couple of other things that is happening around the whole world, and this I want to mention before we actually come into speaking about silver. See, not only has the oil supply chain got blocked, but there is a lot of other activities that happen, which is basically food security. And for food security, one tends to need fertilizers, and that is also getting blocked. So, kind of a lesson that the whole world is learning is A, we need to have energy sufficiency, B, we need to have food sufficiency, and C, you can't only depend on things like tourism. You have to have some other natural resources. I mean, UAE is one classic example where they're facing so much of problem because it's not even their war. They are claiming compensation from USA, saying that you protected us, but their tourism has. I mean, these reports are saying that the tourism is down dramatically, and I'm, for lack of a more stronger word, but it's obviously having a massive economic crisis kind of a situation in the Gulf region. And once the whole world starts shifting away from oil, because how do you have energy sufficiency? Uh, how do you have energy sufficiency versus a situation where you are completely, totally dependent upon oil? By obviously making your own energy production, which is via solar, which is via thermal, which is via wind, basically all sorts of renewable power. We can't keep firing our coal plants further more and more because that's going to have an environmental impact. So then the via media is that we should do this by looking at solar, wind, and other renewable sources. If that has to happen, that's the only way energy sufficiency happens. And then within that, to make that happen, silver then becomes another dimension. Silver again starts playing a big role there. So silver is required for manufacturing of EVs. Silver is requirement for manufacturing of photovoltaic cells, solar panels. Silver is also obviously, if the corporate sector is going to keep buying silver at whatever price, the physical, hoarders and the physical investors of silver are not going to be far behind. They will also kind of catch up, right? So that's something that I wanted to mention before we spoke about silver. So let's bring silver up, and I mean, let's bring the presentation back. Let's sort of move into silver. Yes, please, continue. All right, okay. Yeah, we spoke about this. Yeah, silver. So here is silver. So what it's doing, like it's a multifaceted metal, like I said, massive electronic usage, and electronics is obviously required all right from generation of power to defense systems to energy self-sufficiency and all of that. So silver as a grid is not going to lose its demand, and these are incidentally three or four, maybe five forces that we've actually brought together. This is number 4 on our list because obviously we spoke about central bank buying, de-dollarization, and all that. But silver specifically and its industrial demand will actually see silver also making some huge amount of strides. Now, here's a very interesting sort of a report. Actually, do we have the original report here? Can we actually put the original report if we have? But something very interesting happened. So, as you might have heard about, USA wanting to take over Greenland, and why it wants to do that is basically for all the rare earth minerals and things like that. So it's a very smart country, right? So they are looking at capturing Venezuela. They captured from the point of view of oil security and safety. Then they sort of captured on, or at least they're talking about Greenland because they want to get all the natural resources of Greenland. And in the meanwhile, what they've done is they've actually classified silver as one of the key minerals Now, what that happens, critical mineral, when it gets that designation, suddenly uh, it's happening because the supply is very, very tight. Physical supply is obviously at the tightest ever. It's almost like 6th year, 5 year. It says 225 expected to be the fifth consecutive year of silver market deficit. The 6th year, 2026, is not going to be any different because the production of silver is only viable when silver in today's time crosses $100. That is where the miners will start exploring more of silver. We've also spoken about the fact that silver is a byproduct, so silver cannot be mined on its own. Silver comes along with zinc and other metals. So to make it economically viable, it has to cross about 100. That's reason number one, if you like. Second is critical mineral designation. The third reason is, can you please just scroll up a little bit more? Uh, scroll up. This is a very interesting report. If any one of you is interested in reading, just let us know. So we'll again send it across to you. So they look at this. Declined by about 2%. That's what they're saying. But however, the PV silver demand forecast to ease by about 5%. Silver and jewelry, okay, can you move on? ETF demand is obviously a demand from us. Okay, silver goes. Okay, carry on, please. Carry on. Yeah, okay. Hold on. Yeah. See, this is, look at this sentence. Very interesting sentence, okay? It is vital to the economic and national security of United States, and which is why this designation of critical minerals. Okay, by the way, there's also something that happened, right? China also has restricted the exports because China is the greatest refiner of silver, of raw silver around the world. So they imposed restrictions on exports, which means China is not classified as a critical mineral, but it's almost equal to the same thing because this is how the US has operated. So China is pretty much doing the same thing in that sense. Go down. Is there anything otherwise interesting? Okay. I mean, there's lots of news happening, right? Silver expecting to be tokenized. It's playing a very important role in the Dubai Multi Commodities Center. Then look at this one. Just look at this kind of investment. So Corning is obviously hoping that 1.5 billion investment happens in a new US facility, and for doing that, it basically means much more of them. So what is happening is slowly and steadily and continuously, the need for silver is getting multifaceted, and the demand is coming from different channels of corporate development, industrialization, and obviously, it's a great conductor of heat and electricity. So that's the other reason why silver is also going to have its huge demand. We're not talking about automobiles and things like that because we've already spoken about that in the past, right? So let's come back to the presentation and see what else can we talk about silver. There it is. Very, very interesting. So this is another very interesting. I mean, photovoltaics is nothing but for the generation of solar power. So it's not only India who's thinking about it, but India is one of the biggest players. 139% demand increase, over the last few years in just photovoltaics. I mean, that's a photovoltaics is nothing but the technology required to make solar power. Demand growth, I mean, here's 50% in electronics. And as you can see, gold and net bar and coin demand is quite muted. Jewelry demand is pretty much steady. Now, what is very interesting again in this picture is, let me highlight to you. This is the mine production. Okay, 835 million ounces what it produces. Mine production. The supply with mine production plus the people who are selling it, there's always somebody selling, somebody's always buying, right? So the total supply expected to be 1030 million ounces. Demand, look at the demand, 1148 million ounces. So once again, demand is hugely surpassing the supply available, right from miners as well as from the investing community and whoever is hoarding silver. So the ones who have hoarded silver, very interesting to note, right? You and I and all of us who are holding silver ETFs, and especially in India, our silver is backed by clear silver, in the vaults. In America, also there are leveraged products and non-leveraged products, but the non-leveraged products obviously have silver backup. But once that silver goes into that via the ETF, it goes into the vault, or when you physically buy it and put it in your safe deposit vault, that's gone permanently, right? Because you're not really trading on that silver. It's not coming back in the market. You're not, every few days you're not selling it. You're not buying again and again. That silver is a part of our. So we've also contributed in that demand, but it's gone out. But we're not going to put that silver back as a part of supply. So the compensation of this demand supply gap has to only happen through silver miners. And silver miners, like I said, cannot manufacture. It's not economic. That's what they say through various reports and through various podcasts, that it's not viable for them to manufacture if silver prices are anything below $100. Silver is at the moment at about $72. So you can think about what to do with silver. All right. So finally, what is happening is, just to sort of summarize, all institutions are buying it. Central banks are buying it. This is a great time for everyone to, relook at their investment. So much so that we've actually been saying that why not actually make this as a part of the overall allocation. For those of you who know me, you know that, I've always been saying that, silver, gold maybe have 5-10%, but now it's not really that much. It can be a significant portion of the overall net worth, because for all those people who thought that this was a bubble, there is no leverage happening, there's no euphoria. And that euphoria a little bit happened in January of 2026, which we saw, but that's not the first time it has happened. It's going to happen many, many times, with so long as the demand for silver remains actually intact, and so long as the central banks keep replacing their dollar holdings by gold holdings. Just two very important takeaways for you from this session today. So long as these two factors are intact, there is nothing that is going to change the outlook of gold and silver. And I think these two factors will remain very, very strongly over the next maybe few years, probably till the next 3 years or 4 years. So therefore, for the next 3 or 4 years, I think for everybody, it's a very, very significant part of their portfolio to keep having this gold and silver all along in your portfolio. And things will happen. There are lots of theories. I mean, there could be repricing. There could be some ferocious movement that will happen. We don't know how this will happen, but it's a very, very good idea that gold and silver are both signaling that right now is a very nice time for you to start having some. If you don't already have, and if you have, maybe you can add to it, but definitely not sell. So with that, what I want to do is, I want to close this presentation. There are lots of things that are happening. I mean, there's no end to. We can keep talking about currency breaks, de-dollarization, and all of it. But at the moment, there is a sort of a lesson that is getting learned. We are learning about repricing. We are learning about self-sufficiency. We're learning about a lot of things that's happening, and gold and silver is going to play a very important role. So that's the third episode for all of you friends. And what we will do is we'll stop the recording and we'll have a little discussion on this subject. Okay. Let me look at the chat. Okay. How long do you think this volatility will remain in gold and silver? It's very difficult to say, Gagan, actually. I mean, there's no way to put a number onto it. I will answer this in a slightly tangential manner. So, look at what's happening. What is it that has actually caused this entire problem? It has been happening because of the Iran, Israel, and USA war. Now, is it in the interest of them to really close this war? Yes and no. I mean, yes, logically, because everybody saves money, everybody goes back to business, everybody goes back to their lives, and life is then hunky dory. But for the US, they can't really do that. They can't really just shut the war and walk off because of a variety of reasons. Because they've committed, they've economically, it's going to hamper them very badly. They've already spent so much of money. So what gain will they make out of this thing? It's a little complex for them to get out. So they will continue their blockade, but they will not attack. At the same time, Iran has obviously suffered a lot of damage. So they will also not, want to just go away without making a list of their own demands and without profiting in some fashion from this entire war. So it's like a deadlock situation. So long as this deadlock remains, there will be this kind of a problem. Now, how long will the deadlock remain? Maybe it will remain for another, 3 months, maybe 6 months, maybe another year. Wars, once they start, don't really go away. It's also remains to be seen actually whether US is cleaning out all their bases from the Gulf, whether they're actually going back or not. Till such time all this happens, gold and silver will, in some sense, remain volatile. And it is also in the central bank's interest to keep it a little volatile, right? Because if it starts moving up, from the central bank point of view, gold will become expensive, so they'll have to spend more dollars to buy that. From the industrial point of view, if silver moves up too fast, then again the cost of everything goes up, inflation moves up. So they also don't want it to happen. So I'm sure what is happening right now is everybody stockpiling. So in fact, I think look at volatility as an opportunity, and which is why in 2026, right behind me, we've actually labeled this year as like a perfect opportunity to buy gold and silver. Because once we cross these levels, once we surpass the $70 level in silver, once we surpass the 4,500, 5,000 level in gold, we will probably never see